Welcome to today's video. My name is Madelon Vos and this is Madelon Talks. Today we'll discuss the most important macroeconomic and crypto related news of the week. And in this week's video we will start off with news from the International Monetary Fund because they published that inflation might not be transitory. And that central banks may have to step in. So we're going to dive deeper into that news and some news around that published article. And besides that, we're also going to take a look at the new regulations when it comes to cryptocurrency exchanges and stablecoins, because over the last couple of weeks there is a lot going on, and I will explain if you need to worry about this or if this is great for the crypto market. And in the end of this video we will take a look at the chart of Bitcoin and do some analysis, also some on-chain analysis, so stay tuned to the end. For now, I'm going to put myself in the right corner of this video, and if you aren't subscribed to the channel yet, make sure to do so by clicking on the red button down below and click on subscribe. And if you click on the bell, you will get notified when there is a new video online. And also don't forget to press the blue thumb if you like this video. So for now, we're going to start off with this tweet from Jesse Felder mentioning a quote from Mohammed El-Iran. He's the bond market guru, and he says the following: inflation is not going to be transitory. I have a whole list of companies that have announced price increases, that have told us they expect further price increases and that they expect to stick. And this is very, very, very important because based on inflation, the central bank might need or might not need to step in. And if inflation rises, the central bank has to do something. And this has an influence on our portfolio and on our portfolio management. So what we want to do is what the cause of this kind of inflation is. And then we probably know what the central bank can do to bring the inflation down to 2% as they wanted to have, like the price stability mandate. So how does inflation occur? And for example, if we take a look at demand for products, if the demand for products increases, then customers are willing to pay more for a product, and this means that the prices are going to increase as well. And this comes from a growing economy. So if we are in a high conjuncture in which the economy is growing fast, the unemployment rate is low, a lot of people have a lot of money to spend and they're spending it. So this means that we have a cycle upward because people are spending more, then a lot of companies want to hire more people, and this means that they have to spend more and we grow. The economy can grow, the GDP can grow as well. But in this case, it's quite different, but I explain this later on. If we take a look at the measurements that a central bank can take when prices increase too fast due to a growing economy, then they will have to tighten policy. For example, they can say, we're going to lower the interest rates, and this means that we as citizens can't get money very cheap. So we have to pay more for getting a loan, for example, or a mortgage. This becomes more expensive, and this means that we don't have to spend that much or that easy, that cheap. And for companies, it's probably almost the same. They want to do R&D, research and development, for example, then they have to get loans. And if the loans are very cheap, then it's easier for them to get the loans. But if they're very pricey, then they won't do it that fast or that often. So this means that the central bank can have, or at least had some influence on the economic cycle and the growth, etc., etc. And you can discuss if this is a good thing or if this is a bad thing. In my honest opinion, a free market works, and what we are doing right now doesn't really work. That's why I'm really into Bitcoin. But this is just how it is. It's the Keynesian economics, and this is just how it works. So the only thing that's different this time is that inflation didn't occur because people are willing to pay more. It did occur because there is something different going on. Usually when the economy is growing, people are willing to pay more. But right now, the economy isn't growing. It would, for example, take a look at how many people don't have a job right now. It's quite a lot. It's way more than when we see a growing economy. So the growth in the economy is slowing down and the prices are going up. And then we have quite a big problem, because if the interest rates are going to rise, then it's harder for people to get a loan at the bank. But they need to have a loan because prices are rising. And we also have the wage push inflation, which we talked about 2 weeks ago. Because the prices are rising, people don't want to work in a restaurant, for example, because they don't get paid enough. And that means that there is a systemic risk involved. So this is quite different from a normal inflation, the inflation that we usually see. The inflation that we are seeing right now is due to an increase in product costs and raw materials, but also because of wages. Wages need to rise as well. And that's where it becomes systemic. And if you have an economy that's slowing down, then this is a big problem. But what's going on right now, is the inflation really transitory? That's the big question. A lot of economists, a lot of people are saying, analysts are saying, no, this is not going to be transitory. And why is this not going to be transitory? Or at least, why are they telling us that it's going to be transitory? And this has everything to do with managing expectations. What central bankers usually do is they manage the expectations of the market or for the market. So, for example, if they want to raise interest rates, they are going to tell us this way up front before they are doing this. And they told us that they are going to do this in late 2022 or 2023. And this is only because they don't want to have stock markets react in complete panic. And that's their fault. So the other thing, on the other hand, is that they want to have inflation. They want to have inflation. It's a form of hidden tax. And we are in a debt economy. We are in a debt-based economy. So our economy consists of debt because every dollar that's coming into the economy is debt. For example, you might think, how in the world is it possible? For example, if you have the government bonds, the central bank is buying government bonds with money made out of thin air. It's made out of nothing. And this means that they are purchasing the government bonds. Otherwise, investors would buy these bonds. And now the central bank is buying these bonds. And this means that they are the cause of this inflation. And the more bonds they buy or the more stimulus they give, the higher inflation is starting to run away. This is called runaway inflation. And central banks are happy when it comes to inflation because the debt is shrinking due to inflation. The debt is inflating away. Same for the money in the bank. That's inflating away as well. So your purchasing power is decreasing, but the value of your, for example, mortgage is decreasing as well at the same pace as the money in the bank is decreasing. So governments, central banks like to have a devaluation of money, but not as fast that people can go to the supermarket or can buy a house or can live or whatever. So they're trying to manage this as much as possible. And when it comes to, for example, the interview with Lynette Zhang and with Daniela Cambon, they already discussed this and they said it's impossible to do anything besides hiring interest rates, but they're probably not going to do because they like this climate and it's hidden tax, so no one sees it. Okay, so for now, we know enough about inflation. We know enough about the fact that it's probably going to be not going to be transitory. How much more will your Oreos cost? Companies test price increases. This is important because faced with rising cost of material, transportation, and workers. So this is actually confirming what we've just discussed. The price of materials, transportation, and workers is increasing. So this means that they have to increase the end products as well. For example, from metal fasteners to Oreo cookies, helping fuel inflation like US hasn't seen in more than a decade. The company's stock price increases and they will probably remain the price will probably remain this high. And when we take a look, for example, at coffee, Jeroen Blokland tweeted about the fact that coffee has been way more expensive than it had been before, especially looking at the last couple of weeks. Then we see a rapid pace rising, inflating these prices, but there was no inflation at all until July 26th. And even if there is, it is transitory, but it's probably not transitory. We know that it's gonna stick. But there is a different scenario. So I've been discussing this before in another video. Stagflation could pose a major problem because central banks can't really come to rescue and cut rates. I just spoke about the fact that they want to cut rates, but they can't cut rates. So when you are in a stagnant situation, you are in a situation in which we have inflation and a decreasing economy, an economy that's not growing anymore. And in that kind of situation, it's really hard to, on the other end, use cutting rates as a mechanism to get people into more debt and let the economy grow faster. But on the other hand, when we have inflation, you just want to you want to increase the interest rates instead of cutting them. So this is a tough situation, and that's why Daniela Cambon and Lynette Zhang said they just can't do anything, because on the one hand it's gonna be a mess, and on the other hand it's also gonna be a mess. If they cut interest rates even further, then there will be more money flowing into the economy, and then we will see more inflation. And if they higher the interest rates, then we will see that the complete bubble bursts, because of the fact that this system is based on the fact that there's new debt incoming every day, every week, every month. And if that's not the case, then the pyramid will collapse. So that's what we're seeing right now. And there are a lot of people that are having concerns, and that inflation is a legitimate risk that will be painful for US markets. To be honest, inflation doesn't necessarily mean that the stock market is going to collapse or something like that. But if they're going to rise the interest rates, then we might see a collapse. And I want to discuss, by the way, before we are going to take a look at the stock market, in the 1970s, we saw that the stock market went sideways for 17 years when we had this stagnant situation, the stagnant situation of the economy slowing down, but still having inflation. That wasn't a good time to invest. And this all became a fact because we found out that Paul Volcker wanted to have the interest rates increasing, or he increased the interest rates to, I think it was 20% or something like that. In this scenario, it's going to be impossible, because then the government would collapse. Then we will see companies, whatever, everyone will be no one can pay their debts anymore. So that's not going to be the scenario. But what will happen next, we actually don't know. They can higher the rates a bit, but they couldn't do it that fast. So they're in this situation in which the left side and the right side both are not good. So that's probably why they wanted to have a great reset as well. If we take a look at the debt per capita, it's growing in a rapid pace. We haven't seen a rapid growth as this before. So this is insane when looking at charts. And now yesterday the IMF warned that inflation could prove to be persistent and central banks may need to act. The IMF had already pointed out that the US were to provide more fiscal support, then this could increase inflationary pressure. So they can't do this fiscal support. They must higher the tax rates, for example, even further, and leads to a hike in interest rates, earlier than expected. So they might even increase the interest rates earlier than expected. So the IMF is on this as well. But we might see what's going to happen next. But the IMF says that inflation could be persistent, so not transitory at all. And we're probably going to see news from the Bank of International Settlements and from other important, not from the central bank, but maybe from other banks as well. So that's what the situation is about now, and we will dive deeper into this when there are more figures released over the next coming weeks, but this takes time. So we're now going to discuss the regulatory issues that Tether is undergoing. Tether is the company behind the digital token USDT, and it's plagued with regulatory issues. And why is this so important right now? So Tether had some years-old allegations on which the company didn't really respond. Some investors thought that the reserves that Tether should have as a stablecoin, the one-on-one reserves, might not be able to be in the bank, so that investors couldn't redeem their dollars. If they want to redeem them, there might not be enough dollars. So what Tether did is they said, we are not backing one-on-one, we are backing one-on-one with USD, but also with bonds, with stocks, whatever. And this is a bit fishy. There's something fishy out here. And the regulators are jumping on this because not only because Tether is the backbone of the cryptocurrency market, of course, we must take into account that Tether has nothing to do with Bitcoin or other cryptocurrencies. It's just a vehicle for transporting dollars into the system. It's easier or something like that. It's easier to transfer stablecoins as well. And the stablecoins are a systemic risk to the dollar or the euro. And the central bankers have spoke about this before, that this is a systemic risk to their system because it's really easy to use, it's really cheap to do transactions, and it's really fast. It's faster than using dollars or euros when it comes to international transactions. But we do not know if Tether is fully backed, and this might be a bubble that's going to collapse in our face. I would not recommend using the exchange that's involved with Tether. It's called Bitfinex. I would not recommend to have a lot of money in Tether. And there are coming more restrictions when it comes to stablecoin because the fact that this is a systemic risk. Tether is something different from Binance. I'm also going to talk about Binance, but this is in fact a really important discussion, and it's all about the fact that is Tether, for example, fully backed? And the fact is that we do not know. And we are probably gonna know because the regulators are going to put these markets or put these stablecoins under pressure and have some new laws and regulations for offering these kinds of stablecoins. But the fact is that this is a systemic risk for the economy, and that they might even say we're going to ban these stables. I don't think that this is what's going to happen, but they can say it. So keep that in mind when using stablecoins. I won't say you're not going to use stablecoins anymore, but the fact that these coins are called stablecoins doesn't mean that they can't go below 101. USDT can go to 0 or can go to 2 cents or whatever. That's possible with stablecoins as well. And stablecoins all consist on the fact that we trust it. The same for the dollar, by the way. If we don't trust the dollar as a payment mechanism anymore, it's going to collapse. And the same happens the same is possible for stablecoins as well. And then we had Binance CZ that's looking for his replacement as the exchange got regulatory house in order. So Binance CEO Changpeng CZ is now looking for a new CEO. And this is where it becomes interesting because he's looking for someone that has more background when it comes to regulatory issues. So Binance has had a lot of problems when it comes to their cryptocurrency exchange, and they're having problems because they don't have a registration everywhere in the world. They need to have crypto registration. For example, here in the Netherlands, they need to have a registration. Binance doesn't, so they can't really offer their products to the citizens in the Netherlands. And the same for Europe, and probably also for other countries as well. So this is where it becomes really interesting, because right now the real question is, they can't do ideal transactions anymore. They can't do SEPA transactions, which are really important when it comes to the European system of cryptocurrencies. But how hard is it for Binance right now? How are people that are working for Binance acting right now? Is this going to be a Mt. Gox 2.0, or is this completely going to be fine? And are they just going to undergo some restrictions and add some withdrawal limits, for example? That's what they, by the way, did. Binance has been lashed by a series of regulatory actions across a number of jurisdictions, for example in the UK and in Japan. And on Tuesday, the company reduced its customer withdrawal limits from 2 Bitcoins to 0.06 Bitcoins. And this is probably because of the regulatory issues. So they're now going to get some regulatory stuff that they need to do before they can get a license, for example. But this might even be a good thing. And then we had Amazon. And this is where it becomes interesting, because there was a rumor on Twitter. CryptoTrader was screaming about the fact that Amazon was hiring a blockchain and digital currency leader, and that they might want to have Bitcoin as a payment system by the end of 2021, and that they want to have their own cryptocurrency in the beginning of 2022. And this is what an insider said. This insider, by the way, is fired, and this insider is now hired by Apple. So that's quite interesting. But they were looking for a new digital currency and blockchain lead. This is where the rumors relied on. And this all ended up in a fact that there has been a short, and more than 950 million, almost 1 trillion of crypto shorts were liquidated on Monday. And this is the most since May the 19th. So that's quite a lot. And after that, the market formed a higher high. And that's where it becomes interesting, because that's what we need. We need to have a higher high in order to form this bottom formation. Just as we discussed, I'm going to take a look at the technical analysis in a few web pages, but the most important fact is that Amazon later on fired their employee, which is hired by Apple right now, who's hired by Apple. And the funny thing is that the price of Bitcoin didn't decrease as fast as it increased after Amazon spoke about the fact that they aren't going to do something with Bitcoin. So still the price set a higher high, and Plan B tweeted about the fact to reconfirm on-chain signals still indicates that this bull market is far from over. 64k was not the top. This is in line with the S2FX, of course. That's what he is saying right now. This bull market is far from over. Now, what does this stock to flow model looks like right now? We're currently here. We're way below the target, by the way. We must hit the target of 110k right now. We are still not there yet, far behind, but we don't know what's going to happen next. If we take a look at the bull market compare, it looks like this right now, and this actually looks quite good. If we overcome this last resistance, then we might see some new highs, and it can go really fast. We have seen a decrease in this area. This was area 3, the last one of 2017, in which we saw the price decreasing quite fast, and then went upward fast as well. Here we've also seen a decrease, but it looks way different, of course. We have to take a look at the orange one, and then it can go quite fast. Maybe we're going to top a bit later or so, but for now it's looking quite good. Actually, we're going to take a look at the chart, and this is what the chart looks like right now. I'm going to zoom out on the daily candles in order for you to see what happened. I will like this. What is going on right now? I'm sorry, I drew a lot of horizontal lines, but we have had this bull market rally. Then we topped out, we had this rising wedge, we broke out downward, hit the target price here, then we went upward again. We made a very pretty head and shoulder pattern, hit the target point of at least 33k. Then we fell back into this falling wedge, and this was the price target of this falling wedge. We broke out upward, we hit this target point, and now the question is, are we going to create a new cup over here? Are we going to see a new head and shoulders, but the other way around as we've seen over here? Or maybe even cup and handle formation on this side. The resistance is quite strong over here. So we have seen this falling wedge pattern. I will delete this one, this falling wedge pattern. And right now we are looking for this bottom formation. It actually looks quite good, but we can create something over here, a new pattern or so. I'm going to zoom in on the hourly, then you might see, no, we're going to zoom in on the 15 minutes, that's nice. So we hit this target point. I'm going to delete these ones. As you see, we are in an ascending triangle which breaks out upwards most of the times, but for now this is quite a strong resistance. We are stuck in the middle on our side, so we can't say much about what's going to happen next. But when looking at this, it looks like Bitcoin. We have seen this over the last couple of months, from December until March or so, and this looks like Bitcoin. It can go the other way around really quick, from bearish to bullish, and from bullish to bearish, and from bearish to bullish again. So right now we have to overcome this area. We have to test this area a lot of times in order to break out upward. I want to see high volume, higher than average, and it might take a couple of more days. Let's say before the 8th of August, we want to break out above this area and then go back until 50, 52 or so. But if we manage to stay around this level for next couple of weeks, it also isn't that strange. So we shouldn't go really fast. We shouldn't go upward really fast. We've seen this increase and it was fast already. So let's go for the sideways mechanism and build more momentum instead of increasing really fast. Here we have some possible burst divergence if we manage to go downward. Why is this burst divergence? We have tops on the chart that are going upward, and we have tops on the RSI that are going downward. So take that into account for the next coming days or so, and we might see a new pattern evolve over here. I will update you on Twitter, on Instagram as well. Make sure to follow me on Madelon Vos with a lower dash and 2 lower dashes on Twitter. There are a lot of scammers, by the way, but this is the real deal. So I would like to thank you for watching this video. By the way, if you want to, I didn't discuss this yet, but if you want to trade on Bitcoin or do some technical analysis or do something with charting or something like that, then I would recommend using the link down below. These support links may help you to find the best partner and get the best deal, because we managed to arrange the best deals for our viewers, our subscribers to this channel. So for now, I would like to thank you for watching this video. Also, make sure to don't forget to press the blue button if you liked this video, and I hope to see you soon next week. Let me know what you think of this video, and if you agree with me on the stagflation point of view, and also let me know about the price of Bitcoin, what you expect for next week or the months coming. For now, I would like to thank you for watching. I hope you've enjoyed this video. I did, and see you soon with a new Madelon Talks. Bye!